Good morning, all. Great to see everybody in New York City. We appreciate you coming out. We're just going to take a minute to introduce ourselves, and then we'll hop right into some due diligence. My name is Blaxberg, also known as Wolf on Twitter. I'm a Twitter Spaces freak, 40 hours a week. I love it. Don't wish it upon my worst enemy, but I have a great time with it.
My name's Treshnell, and I am the co-founder of DropTools, which is an NFT analytics software tool online. And it's DropTools with a Z.
Hi everyone, my name is David, and we built NFT Scoring, which is essentially NFT marketplace for heavy traders. So we bring all the different data, we aggregate many marketplaces you can directly buy from our website with like instant rarity reveals. And yeah, we'll talk about it like on the panel later on.
Hi everyone, excited to be here. My name is Teng. I spearhead our NFT coverage at Delphi Digital's research division. Just quickly about Delphi Digital, we have three major arms, and our vision is really to separate find the signal within all the noise. We have a research division, a venture arm that invests in early stage startups, as well as an innovation lab that actually builds products. So really excited to have this discussion with my fellow panelists here.
Love it. Let's hop right into it. The world of due diligence. Pretty excited for this one. I think it's something that everybody needs to know. I love the comparison to an airplane, right? How does this even work? How do we get into it? So, Amber, I'd love to throw the first question over to you. A lot of people got access to whitelists, allow lists, and all these different types of projects. And that was often the first step, was getting that access. But what comes next? What do you need to know about the project before you actually go ahead and mint? Should you just mint because you're on a whitelist? Probably not. So Amber, I'd love to hear some of the things that should factor into people's decisions. Once they're maybe have access or they see something's minting, what are all the different metrics and tools and ideas that they should look at before they go ahead and actually spend some of their hard-earned money?
Good question. And if you asked me this about 6 months ago, I might have a different answer. A year ago, definitely a different answer. But some of the things I look at would be their social, see how many followers they have, jump into their Discord, see how many Discord users they have, how many are actually active, because many of them are, bots. I look at their website, I look at their roadmap, I look at the first phase, and sometimes the roadmaps aren't fully mapped out. The first phase might be, the only one that's mapped out. So I look and say, would I be comfortable with just that one, being fulfilled? I look at the utility and I look at, what is it? Is it good? Is it bad? Like, is it valuable? And is it sustainable? Because, you can see all these lofty goals, but if it's not executed, then it doesn't really matter. I'm also looking at the smart contract. Definitely read the smart contract. I've had ones before where there's been spelling mistakes and a couple other red flags, and then it's been a rug. So luckily, I could avoid that by looking at the smart contract. Look at where the NFT is stored. Is that going to be something that will be there in the future? What else? I also look at things like IP rights. So if you see an NFT that has, a dog wearing a Louis Vuitton jacket, don't buy it unless they own the IP rights. Because if they don't, your NFT will get pulled from OpenSea and it will be worthless. On the other side of IP rights is I always look to see, do we have commercial IP rights as an owner or as a buyer? Because sometimes you'll have IP rights that are just for personal use, which means you can print your own t-shirt, but that's about it. But other ones like Bored Ape, for example, they give a license, an irrevocable license, where they can use their apes to do restaurants and cartoons and clothing lines. So those are some of the things I look at. And then also right before, this is really key, I look at, I don't mint right away, and I look at how many mints are happening in real time. And you can see, like, if a project has 8,000 or 10,000 and you've only seen 300 minted in the first 30 minutes, that's definitely, kind of something to watch out. And then if you also look on OpenSea at that time and you see that, the floor price is lower than the mint price, obviously that could be an issue. Now that's not always an issue, but if you look at all these things as a whole, then you can kind of start seeing red flags like that.
Awesome.
As you mentioned, like how social metrics are important, what I would like to add also is that first of all, there are you can easily buy followers on Twitter, right? So it doesn't really tell you much. But what you can't really buy is like what followers do actually follow you. Do you have like, or you as a project creator, do you have like any of the Whales followers? Do you have like any influencers following your account? If you do, that's like a very good sign for like anyone to mint that collection. And that's actually one of the things that's been really like requested from our community, from our users. So you can even find this one on NFT scoring. So feel free to check it out.
Yeah, I think that's really key. I think like the engagement score. So, you know, looking at on Mint Day, if they say, hey, it's Mint Day, and they have 90,000 followers and only 300 react, or same on their Discord, 300 do a reaction on Discord, like that's a huge red flag too. It's a good comment. So, you know, I went through all of that. One of the key items was utility, and I kind of just brushed over all of them. But Gav, would you like to tell us a little bit about utility and, you know, how do you determine if it's valuable or not?
Yeah, utility's super tricky. I've worked with about 45 projects at this point providing marketing services via Twitter Spaces. And the first question I always ask is, what problem does this solve? Because to me, that's what a business needs to be doing. And these are businesses and companies. When you take people's money, it's in exchange for something, it's a company, right? So you have to really delve into that. And there's been 3 real use cases that I found. And the first is by far the strongest. And it's the only use case that I've been able to use to explain utility to people who aren't in Web3, and that is proof of ownership via a simpler method. Best use cases for this that I've seen are real estate, trading cards, other simple non-fungible items that can be put into a wrapper. Basically, what I'm getting at here is there's a lot of processes of selling items right now around the world that are very slow, meticulous, and difficult. Real estate's a great example. You have to go and get the deed, the title, back and forth, all the paperwork needs to get signed. That's a type of contract, right, which could be wrapped up inside of an NFT wrapper, put on the blockchain, and literally me sending that NFT to your wallet is now proof of ownership. You own that thing. You can prove it. You have it on there. That's a very simple concept. I also saw another great one with trading cards. Right now, think about the trading card market. It's one of the best appreciating assets over the last 30 years, but it is impossibly difficult to be a mass seller of these things for 2 reasons. The first is, where am I going to keep all these things, right? They have to be rated, scored, and then kept in a fireproof place, waterproof place. They can't get dusty. When someone actually buys one, I have to go and get a mailer. I have to take it to FedEx, right? It's a terrible problem. And what about liquidity? Where am I selling this? On eBay, wherever else? They're not promoting it there. So I've seen companies that come in and will do things like, hey, we have a vault. We've gone ahead and bought a state-of-the-art system. You can send in your trading card. You can receive a pure digital scan, which is an NFT of ownership. And now, when you want to sell that, you can just send that NFT to someone. You've skipped the whole problem. You can enter it into the company's marketplace. You can enter into liquidity pools. So for me, the biggest example is proof of ownership via simpler methods to access of liquidity and transferring of ownership. Number 2, I think comes in a little bit farther underneath, and that's going to be, for me, really elite echelon communities, right? I think community gets thrown out a lot, and it's tough to just join into something random, but there's really communities that I've seen that have brought insane access to people, right? When you're getting into the same room and same group chats and discords, at the end of the day, we can't deny it. There's massive access, and if you're talking to people that are whales, legends, tons of experience, I can't say that there's not a lot of value within what you're doing there. And then the third is grouping together community resources to achieve something that you couldn't do on your own, right? So similar to DAO, similar to other circumstances. But this isn't new. We've seen this in venture capital. We've seen this in other areas. I think it's just allowing people who are non-accredited investors, who maybe don't have as much money, to have access to larger deal flow. So for me, it really comes down to proof of ownership, elite communities, and access to larger deal flow. I think everything else is kind of in a bit of a sorting pit and a mix, and it's all coming through, but you have to really ask yourself at the end of the day, what problem is this solving? Because if it's not solving a problem, it's not going to reach the mass scale that it needs to in order to really take off. So that's where I'd go with that. Would love to hear if anybody else has any thoughts on utility.
I love it, Gav. Like you mentioned, like pretty much many use cases that people that are not that deep in NFT space struggle to understand. So yeah, well done with that.
Thank you, sir. All you guys.
Yeah. So, David, I know you focus a lot on trading of NFTs, right? I personally take a more fundamental approach when thinking about projects and love to talk about that a little bit. But you focus on, say, trading, high-frequency trading with your platform. So maybe you can talk a little bit about what you think about when you think about, like, say, trying to flip an NFT or trading.
Well, Yeah, sure. When you when you're planning to like invest in an NFT collection for like long time, you probably look at different metrics compared to when you're like planning just to flip the collection, right? So rather than just checking the roadmap, doxing the team, you look at things like, is there enough liquidity in the collection right now? Will the floor price go down in the next couple hours? Are there many unique buyers in the last 30 minutes? Stuff like that. So you need like a different view on the data if you're planning to like do the high frequency trading in NFTs. So basically what you do, how I approach it if I want to like do trading in NFTs, I go to like trending view. I want to see like what collections are trending right now, like where's the liquidity, what people are buying at this very moment. So I open like, that's like the landing page of NFT scoring basically. So you see like all the collections with like the number of trades that happened in the last like, based on like the period you select. But then you like see that there's enough buyers right now. So you might just like want to jump in, you open the detail. But what I really look for right now is the like how many listings were created in the last 30 minutes, let's say, and how many NFTs from this collection were bought in the last 30 minutes. And based on that, you are able to like understand the sentiment of the market right now, and you understand like where the floor price might go. Will it go up? Will it go down? And you find it out based on like people buying basically, because you can't easily fake the transactions. You can't like, well, you can, but you would pay like high gas fees, you would pay also like the royalties, stuff like that. So yeah, so you really care about liquidity, you care about like the floor price. Usually when I flip, I don't really care about the roadmap, I don't care about the team, because I just care about like what people feel about the collection.
Yeah, I guess it kind of makes a lot of sense as well. Like, I'm not that much of a trader myself, but I think the landscape has changed a lot, right? Like, say, back in, say, July of last year, if you were, say, trading NFTs, I think it was pretty easy. It was not too difficult. But I think today, the level of sophistication in the NFT space has risen a lot, right? And I think if you really want to get an edge in terms of trading, especially flipping, you do need to rely on a lot of tools. Otherwise, you're always going to be behind the other people. I'm not sure if you agree.
Exactly, like you said it great, because there are already like many bots being created. They are like doing automated trading. There are like many institutions actually coming into the NFT space to like buy into collections. So right now it's about like the real-time data. It's about like getting the data as fast as possible to get the edge in the market. So when I talk about like NFT collections, like most of the times it's about like PFPs, right? So Teng, like you mentioned me back there, like in the backstage, that you also like focus on PFP collections and like in your research division mainly. So what do you think about like PFPs? What do you think about their future?
Thanks for that question. I think it's a great question. Like, I think just to outline a little bit, like PFPs are basically these profile picture collections. The most typical ones are the CryptoPunks, the Bored Ape Yacht Clubs. These are typically like 10K collections that actually have seen the greatest, I would say, hype within the NFT space over the last 9 to 12 months or so. I do have quite a lot of thoughts around some of these things. I think firstly is that if you're thinking about a new PFP collection that's launching, I think you need to think very carefully, because the competition in the PFP space is extremely heavy right now. If you were to launch a project, say like 9 months ago, if you just had an artist create some artworks, you can launch it and you can still get a fairly good amount of traction. But today, it is very difficult. A few reasons. One is that the supply of these kind of projects is very high. And I would say the target audience or potential customers of these projects have not grown as quickly. For example, I think probably we can think that probably only about 200,000 to 300,000 active wallets on a monthly basis right now. So that is the entire target audience of the NFT community at this stage. It will grow over time, but right now it's still relatively small. And I think secondly, we've also seen a lot of very credible projects come into space. Collections, like say the Moonbirds, the Doodles, that have very strong and legitimate teams. They are doing something that is very interesting in this space. So the question is, if you're launching something, a new product is coming, when I look at it, does this have any competitive advantage, right, against some of these other PFP projects? And when I think about, just very quickly, like the mental model that I have in my mind when I think about a new project that is a PFP type collection, I actually go back a lot to think about how do we evaluate social networks? And I draw a lot of inspiration from Eugene Wei, who's a tech writer who's written a lot about social networks. And I would say there are three main axes that I typically evaluate a community or collection like that, right? Firstly, it's very around entertainment, like being in this particular community. Is it fun? Do the people in the community enjoy being with one another? Secondly, it's really around social capital. And I think that's something that's what has driven a lot of value into these PFP collections. CryptoPunks, Bored Apes, why are they selling for 6-digit figure amounts? It's because as human beings, we are all status chasing monkeys. We love social capital. We want to build our social capital. And by owning that particular PFP, does that increase my level of social capital? For example, the CryptoPunks, a lot of people bought into it because many of the crypto OGs, very rich, very influential people, were all having CryptoPunks as their profile pictures. And that's what gave that a huge amount of value. And the third thing, which I will not harp a lot about because we've covered it a little bit, it's very about utility, right? By owning that PFP, what do I get out of it? Do I have any financial benefits? Do I get any financial value out of it? Do I get exclusive access to, say, almost like a membership program? Do I get exclusive access to, say, in real life events? Do I get limited edition merchandise? I think if you look at a particular PFP project and you think about them on these three axes, I think it gives you a much better sense whether this is likely going to succeed in the long run.
I think it's a great point. Yeah, absolutely right to it. With the communities especially and everything around it, it has to be a trade-off, right? When you're putting in that money, you can't just be like, everybody has a chance to win something that's worth less than the mint price was, right? It has to be more value created.
Exactly.
Awesome. I'm going to pop it back over to yourself, Amber. So we talked about beforehand, PreMint, right? You're on a whitelist, you're on an allow list, you're looking at it. Amber went into detail as to what you should be looking at. But unfortunately, most of us don't catch things pre-mint, right? We see it on the secondary, we see it when volume's running, we see it when the floor price is flying, and that's when the real FOMO often kicks in. And that's where people get stuck. And it's the same thing in the stock market, right? Buying the top, bunch of different pieces. So I'm curious, now I'm looking at a project, right? It's running, it looks interesting, there's a team, there's a utility maybe. What are the different pieces that I really need to be digging into before buying something off the secondary market?
Yes. So I would say, some of the things I mentioned earlier are definitely important. And if you're like me, you're really into data. I look at all of those things, but then I also look at some other things. And why am I into data? I was in banking for 14 years and eventually was the CEO of a global concierge and travel company. So data has always been really important to me, and I've always been able to have access to good data. And when I started out in NFTs, I was like, well, what's this NFT worth? Or what's it going to be worth in the future? Or where are my comps? Like all these questions I had, and I'm searching and I'm talking to people in Discord, and there really wasn't a lot of data out there that could answer the questions that I wanted to really see. And that's why I created Drop Tools, droptools.com with a Z. Flag. Sorry, but no, so we have basically a ton of KPIs that I wanted to see. And a couple other co-founders, they added their input and their KPIs that they wanted to see when they're evaluating whether to buy a project. So what we do is we provide metrics and data to help you buy and sell NFTs in a more informed and smart way. So we have a lot. I'll just go through a couple. Obviously, you look at like floor price and things like that. And also to, David's point, he's totally right. If you're looking at something to hold and gain value over time versus flipping it right away, you're going to look at different things. And we do a little bit of both. So we've got the KPI, and we also, for every single KPI we have, whether it's floor, whether it's subfloor, whether it's 2x spread, whether it's number of owners, number of listings, historical sales, etc., we want to see that for exactly like the traits that we're looking for. So you can name any NFT, but I'm just going to use one that I have. So looking at a recur pass, for example, you've got majority pink, and you have sequence 2, and you have, prismatic. Those are traits or attributes, kind of like an ape that has like a blue background or bunny ears. I want to see the floor, the subfloor, and all those other KPIs for the blended attribute. So I don't want to just see the pink, floor. I don't want to see the project floor. I want to see the pink sequence 2 prismatic floor. And there's no data out there really that has that. So we're basically taking it and putting it in a database and running a bunch of calculations. So those are some of the interesting things that we can see to help value the NFT and help decide whether to buy it. 2x spread is another one that I like. That's basically how many items, and it's displayed in items or dollars, would need to sell for you to double your investment. So, that can be good for flipping or for holding. A few other ones are owners to listings ratio, and what are some of my other favorites? I mean, they're all good, and I think the key is seeing them all in the same spot. So if you have a dashboard and you see all these KPIs in green, red, yellow, and you can kind of look at the whole picture, that really helps you make a decision a lot easier. And so that's what I created.
It's awesome. David, any comments?
I completely agree with you. It's like all these KPIs are really necessary if you like planning to evaluate like any collection. What like is usually very hard for people is to like understand which of these KPIs is more important than the others, and like if like this number is actually like bad, let's say the number of buyers versus listings ratio, is it really a bad sign compared to like other indicator that's like?
Exactly. So we make it really easy, and we put like, arrows, traffic lights in green or red, but yeah, that's totally true. And, over time you kind of get to learn it in your head, but like I'll just throw one out there, like 2x floor, anything that's like about, I would say 2% is kind of the cutoff that I look for. But also it depends on the size of the collection and a lot of other things. So I usually don't take something in isolation. I kind of look at the whole picture. But, we've talked about a lot of different things that we look at now for NFTs and due diligence. A couple times it's been mentioned, but community. So anybody who wants to start an NFT project or anybody who wants to buy an NFT, how do you grow a really good community, Gav?
It's a great question, and I have some hot takes on community. I've spent the last 16 months building a community of 70,000 on Twitter right now, and I've tried to use some of those things that I've picked up to help different projects that I believe in build out their communities. So I need some crowd participation for a second, and then I'll say my hot take. Raise your hand if you're in a Discord. Okay, perfect. Raise your hand if you've ever been in a Twitter space. Now, raise your hand if you've ever voted in a DAO. Okay, I like that we still see some hands up. So here's my hot take on community. 95% of people are followers, and they want to be followers. They do not want to be making the end decision at the top. They want to come in, and they want to see a good idea, and they want to believe in it. What's happening in too many of these projects is it's very open-ended, right? It's we want to go where the community wants to go, right? We want to adapt them. We want to adjust them. We come in, and we have a vague idea. Maybe we have a bit of a roadmap, but we're very willing to adjust to our members. What I look for is founders that have a vision, and they're going to achieve that vision, and they're looking for a community that wants to align with it and propel it and grow it, and those are the communities that I've seen succeed. When you watch what Yuga Labs does, they have a vision. They're up there making moves. They know what they want to do. They know what they want to buy in, and people look at that and go, I want to be a part of that. They don't look at it and say, I want to change that, right? That's not what's happening here. So I think the most powerful of these communities are the ones that come in with a very strong idea, and they then search and look for people to back that around that. They don't try to pander to the most people so that they can bring in the most money or have the most eyeballs on them. Instead, they're looking at a clear-cut vision and line driving towards it. So that's one of my ideas on community. I think there's a lot of ways to go about accomplishing that. Once you have the idea, you want to get it out there as much as possible, of course, within reason. If you're willing to sit on Twitter Spaces throughout the day, it's a great way to build it. If you're willing to hop into Discord, there's a million other tools coming out now. You can get real creative too, right? I see billboards in Times Square. I see people getting celebrities and athletes and different people involved with it. I see meetups at events like this where people go and they make a really special experience and it bonds them with their holders, right? Even one meetup can change that entire person's vision of what you're building and them wanting to be a backing of you. At the end of the day, I think it makes the top coming out with a strong vision and then disseminating that vision to each person in their community with as much one-on-one time, attention as possible directly to that community. We want to hear it from the top. We want to hear it from the people who have that idea and vision. So that's my hot take is I think a lot of people think that in these communities, they want to come in and they want to form it and they want to shape it, but it's not what I've seen be successful. What I've seen be successful is the founders and leaders in that top 5% dictating a strong, powerful vision and then looking for people who align with it. And listen, it may not work for everybody, but the ones that have done that have the highest, highest floors, highest volume, highest everything else that I've seen. Look at it, it's a common factor and trait among them. I think Moonbird's in chief right there, right? We saw the founder come out, we saw him on Twitter. They came out with a strong vision and that thing skyrocketed and so on and so forth. So I think it's complicated for founders nowadays, right? In a bear market, in a recessionary territory, more than ever, we want to kind of look around and say, all right, I want to draw people in. I want to be open. I want to target everyone. But the fastest way to grow on any social media platform and the fastest way to grow a project is by having that clear-cut vision and attacking it relentlessly. So that's what I got there. I think we're sadly coming up on time. So I'd love to go around, just give everybody a final comment, then we'll wrap up here. David, anything else you'd like to share today?
I think like what you just said is like a strong point to actually realize. What I love the most is that like actually 95% of the people in the Discords, in the Twitter are the followers. That's actually like a huge number. So it kind of means that if not everyone is interacting with your Discord, if like not everyone is actually reacting to your post when you're like trying to build a community, you should not really put that much of an attention to it because that's how it's supposed to be, right?
Yeah, we can't say any bad words, but the haters, we don't pay attention. Yeah, it's you got it. Yeah, FUD. You got to roll with it. Absolutely. If Steve Jobs listened to every single person who told him he was doing something wrong, would not have worked out. Teng?
Yeah, I guess just a final comment on some of the things you said, like around community. I think it's very interesting. And I think what we've seen so far is that there's no right way, there's no one single way. And I've also seen many projects that actually the ones that actually are most interesting to me are those that actually come from the grounds up. Actually, it starts from the community. And from that community, the leaders emerge and have that strong vision and bring that project forward. And for example, projects like, say, Loot Project, Treasure DAO, some of these are very grounds up community-driven projects that have actually done really well as well. And I think the sweet spot is really when the founders and the community align in their values. If we have a founder that has a community and they have that mismatch in terms of values and direction, that project is going to flounder. And we've seen many of these failures also. So I think it's important to find that sweet spot. And as a founder, it's always very important to listen to your community, constantly get that feedback, understand what are the kind of partnerships your community wants. I think that's the way to grow because we are living in the Web3 world, right? We're not in the Web2 world where everything is dictated from the top down. We need to bring everybody in, and I think that's how we build a brighter future.
I love the pushback also. There's totally different ways. Just because I have a mic on stage doesn't mean I'm right. It means I have an opinion.
I just wanted to say I really enjoyed this panel. Thank you to all my co-panelists, and thank you to NFT New York. And that's it. Any questions you guys would like? I'm available on Twitter, Amber Tweets with a Z, and of course the Drop Tools one as well.
Thank you guys. It was a great panel. Thanks everyone, and enjoy the rest of the conference.
Thank you, everybody.
Thank you. Have a wonderful week.